My name is Roel Nieuwenkamp. I'm the chair of the OECD Working Party on Responsible Business Conduct. Unfortunately, I couldn't join your meeting, but I will be very happy to contribute via a couple of frequently asked questions.
Thank you. Could you start by telling us why the OECD believes environmental and social governance, or ESG, is important for banks?
Well, first of all, because it's the right thing to do. Banks should do the right thing. But I think for this purpose of this meeting, I think it's important to stress that there is also a very strong link between financial performance and ESG risks. Well, the Volkswagen case is, of course, a case in point, but there are many more examples to be given. For example, in the mining industry, where the business case for ESG risks is very strong. Companies have lost billions of euros by facing human rights issues, for example, with indigenous people, by not engaging local communities in the right fashion. So there is a very strong business case to do so. Research on an international level has been showing more and more clearly that sustainable businesses perform better, so not sustainable businesses perform less. And that's something banking supervisors should pay attention to.
And what does due diligence actually mean in the context of banks?
Well, the OECD Guidelines in 2011 created supply chain responsibility and value chain responsibility on issues for human rights, environment, labor issues, etc. And this is basically about not causing or contributing to negative impacts on the environment, on human rights, or on labor rights. And to do so, the central concept is due diligence, risk-based due diligence. And that basically consists of three elements. First of all, you have to identify and to assess your risks. So for a bank, that means check your portfolio, check your lending portfolio, check your equity portfolio, even if it's minority shares. Check where there are risks in your work, not only for yourself, but also in your value chain. And then the second part of due diligence is to manage these risks. Basically, that means to prevent or mitigate the potential or real negative impacts in your portfolio, whether it's credit or equity. And then the third element of due diligence means that you have to be accountable for how you address these risks. So you have to report about it. You have to be open and transparent about it. So these three elements are forming due diligence. To do so, you have to embed it into strong management systems. So you have to have a strong policy on responsible business conduct. You need to have, for example, as a sub-part of that, a strong policy on human rights. And of course, the second element to it is that you need to have a good system for remediation if adverse impacts occurred. So if, for example, in your value chain you have caused or contributed to an adverse impact on human rights or labor rights. So that's basically the steps to be taken for due diligence.
In the context of banks that might have thousands of companies in their portfolio, aren't these expectations a little unreasonable?
Well, what the OECD and the UN expect are reasonable steps. And I think important here is that the identification of risks and assessment of risk also includes prioritization. Prioritization is possible because you have thousands, and for supply chain, some companies have hundreds of thousands of suppliers. So you have to prioritize. And how do you do that? Well, on the basis of the severity of the impact. That's the main criteria. And besides, it's important to stress that it's not a sort of zero tolerance approach. This is an approach which is focused on continuous improvement. So you can make mistakes as long as you have a proper process to address this and to prevent those kind of mistakes from happening again.
In many cases, a single bank will only be a small minority investor in a certain company with almost no influence. So what are the expectations of them in this context?
Well, that's a real state-of-the-art question, which many banks are struggling with, because the question is, what do you do if you don't have enough influence? Well, then the OECD guidelines and the UN guiding principles say, well, the first step is not to run away. First step is to try to seek to increase your leverage. And how can you do that? For example, by working together with other people. For banks, in particular in product finance, sometimes you are in a consortium. Try to get the other partners in your consortium on board of trying to apply pressure on the company that's actually breaching the human rights. And sometimes you're a minority shareholder. Well, what you can do is try to find other investors and work together to apply pressure on the company which is actually breaching labor standards or causing huge environmental damage. So working together here is essential. You can do that via multi-stakeholder initiatives, but collaboration is key.
Should banks divest when environmental and social governance issues arise?
Well, it's like I said, the first step is not to run away. The first step is to try to improve the situation. And that also, the same goes for banks. So first you try with multi-stakeholder efforts or with collaboration to change the situation. If that doesn't work, then of course divestment is an option, but we see it clearly as a last resort option.
And what is the OECD doing in this field?
Well, the OECD, first of all, has this huge, unique grievance mechanism in 46 countries, from Chile to Australia and from Canada to Japan. So this is called the National Contact Point for Responsible Business system. And they handle grievances. So they sometimes deal with these cases. They have been dealing with complaints against banks from local communities, for example, or trade unions. And then they have a task to try to mediate these problems and to find a solution. But second of all, there's a more proactive project in the financial sector, basically to clarify what due diligence means for the financial sector and what it also means for banks, because sometimes it is indeed quite complex to organize this, and clarity is asked for by the banks. So we work with multi-stakeholders, so NGOs, trade unions, and the banks themselves in trying to find answers to difficult questions and also to identify good practices.
Thank you so much.
Thank you very much, and have a great day.